Morning, Veronica. Good evening, Alan, and the rest of
Evening.
Europe and Russia. It's Friday, the 9th of April. So we're past the first quarter. We're into the last kind of probably bullish month of the major indexes until we get into the fall. But before we discuss the markets, let's get into some of the macroeconomic themes we're hearing in the news. Veron, you want to cover housing, and I know you want to cover some kind of consumer. We're going to talk about consumer debt, and Alan's going to talk about gold. So let's just start from the top. Veron, you want to go?
Yeah. So we discussed house pricing in the middle of the pandemic, and I'm just going to show some results of the house pricing also boom. Normally, property prices, as we know, to go in tandem with the economy, but during pandemic, house prices in the United States went up 11% in 2020. So even most of it, of course, it's buying new homes or second homes outside of the major cities. Like, for example, in Germany, outside of Germany's 7 biggest cities, the house prices rose by 11% last year. Compared within the cities, it's only 6%. Same thing like prices in Sydney, northern beaches within commuting range of the city were up by 10%. But overall, worldwide, house prices during pandemic went up 5%. And as I mentioned, mostly people buying outside of the major cities. And of course, we know it's because as COVID-19 spread and many countries locked down, people's homes became their offices, their schools, their gyms, their bakeries, everything. And of course, many people started spending more on their properties. And that's where the Bank of America report shows. I would like to share in a second. And where do the money go? So mostly goes into home improvement, furnishings, bedding, spending on hobbies and pets. So that's where the stimulus money goes. That's where savings goes right now. And because of that, revenues for companies like Home Depot, they rose by 20% last year and still rising. In Britain, permissions granted for home improvements, such as extensions, increased by a third in 2020. And that's compared to the average in 2016, 2019. So also, we know in America, 14% of all mortgage applications like made in February were for second homes. And that's where twice the share in April last year. People are buying second homes again outside of the cities, but there is also investors are betting right now on prices going up in the cities when the economy is gonna go up. So that's something to look at as well, especially when the immigrant work is going to come back, where international students going to come back. This is something to look at.
That was interesting. I saw a chart on Germany, I think, or Europe in general, and it was very similar. The amount of savings, the savings rate that the Europeans have had. But what was interesting is that the analysts think that very few of that, or very little amount of that, will actually feed back into the economy. So people are just saving, and they're not consumers. So it's not an American. I think there's a difference between America and maybe even the UK, who kind of think that they're more American than European, so maybe more Anglo-Saxon. But the Germans, of course, and some other European nations are different. And you're seeing huge spike in the savings rates, but the actual spending rate was it went up, but it didn't go up anywhere near as much as the savings rate. So it's interesting for those that are looking for Europe to kind of outperform, which it has been doing. It's been doing pretty well over the last month or two. Then whether that's going to continue or not.
No, but in terms of spending, if we look also at the charts, so if you can see these charts, the people in the United States get their checks, and where they're spending money on, they're spending on home goods, furniture, and on home improvements. This is the jump in March, April that we can see.
The minute people get I mean, this to me is amazing.
It's all based on checks, but yeah, they invest, somebody invests money in stocks, like younger generation, but older generation probably put everything.
And you can, people also invest in home improvements, not for property investment value.
So what's great about this, and we talked about this before, the minute people get money, they buy a new bed. Bedding retailer. This is Purple. We've discussed some of these, Tempur-Pedics and Casper, these mattress companies. Look at this.
I was going to say, make a distinction between mattress companies and bed companies.
Well, because you stay with your computer in bed half of the day.
These charts are absolutely amazing that they did.
Chris has just got a shirt on, but below that, that's not a lot.
I mean, this is just pure government money going to the bedding firms. It's just incredible. Alan, let's change from where people are spending their money to why there's nobody's saving in gold, or maybe.
Yeah, well, I wanted to bring up two websites that actually were, I think, a day apart, the articles. It's just the headlines say it all. Has gold finally bottomed, which would indicate that someone is taking a bullish position. And this guy is gold not out of the woods yet. So, it's the different, I think it's one day apart in these articles. There's a kind of triumvirate. There's the bond prices, inflation, gold prices, all of which have an impact on each other. So we're seeing that, from a technical point of view, this guy is saying, I think the other guy is saying that the dollar is gold price is hitting a bottom, and it's not going to go down much further. Mm-hmm. And actually it should come up from there. Yeah. Mm-hmm. That's what you're seeing there. Others are saying that the opposite, that basically the dollar is going to strengthen, mainly because of bond yields. And inflation, I think that now the Fed is saying that they're aiming for more than 2%, 2.5%, I think, on inflation. So we're going to see maybe the dollar strengthen. My point is that it's still a very confusing picture with regards to this, because constantly we're getting asked about dollar strength, about and particularly for Russians right now, ruble weakness into dollar strength, euro strength, pound strength. Dollar is seemingly strengthening, and we've been over this a few times, guys, that since Biden's looked like he was winning the election in November, the dollar and all the sentiment was negative, and then it's bounced from there. And and this is what we were predicting, that the dollar would, or what many people were predicting, the dollar was going to lose value this year, and that's not been the case at all. And that's not helped, I have to say, that's not helped emerging markets, which have had a very poor quarter relative to a lot of things.
Mm-hmm. Gold, if we just extend our line here that we always do, we just extend it to the right, hits that level,
right,
that they highlighted in this article. It hits it perfect. So everybody's looking at the same exact thing that we've been looking at for weeks, and saying, look, it's done above that.
Yeah, if it goes above that, we're going to go up quite a bit.
Bullish on gold if it goes above that, but it has to clear that now area of resistance. So it doesn't it's going to do it. Yeah. I'm in more of the bearish gold camp right now in the strength. So
you wanted to talk about consumers, Chris?
Yeah,
credit card loans.
I have actually a lot to talk about. So let me just. What time is it? 11:30. Okay, we'll try to get through this in 5 minutes.
Pick a couple.
Yeah. So I have a few stocks I want to show. Let's talk about Bitcoin, because that kind of gold goes into the Bitcoin, right? So Bitcoin, if we look at,
is BTC not BTG, as somebody was making a mistake that I saw.
So this Bitcoin, I found this liquid index is kind of the best thing I've seen. So it's you get the price now up here, breaking in on $60,000. This is probably the third attempt, and likely the last attempt before it will break through it. And so you might see this even over the weekend, a break above $60,000 in Bitcoin. It's kind of an interesting play here, because some of the stocks that we've talked about before, this Silvergate Capital also looks like it can break out here from a triangle pattern. And this we've mentioned in Telegram before. So I'd be bullish on Bitcoin way before I'm bullish on gold, and that's just because that's where the inflation group seems to move their money, not necessarily in gold anymore. I wanted to bring up a couple other stocks, but before I do, I want to talk about this news that came out this week about I don't know, did you guys see this about GM having to shut down, halt production in North American factories because of the chip shortage? So they don't have enough chips to build cars, which is just incredible, really. If you think about where we were even 5 years ago, no one was talking about chips in cars and how that would be the most important ingredient or the most important component of the car. They're talking about these large SUVs, which are the expensive vehicles, right, for these companies. And we've talked about previously how important that is for the United States. So one of the things the Wall Street Journal reported on, even I think this was this morning, was basically that the White House's new infrastructure plan is a major plan to push for chip production in the United States. So really, it's not against just China, but like to bring it home because it's a security issue, but it's also an economically sensitive issue. And they're going to push their $2.2 billion or $2.4 billion yet to be determined infrastructure spending plan is going to include building factories for chips. The plan includes a $50 billion for American semiconductor industry, $50 billion from the government to build factories, research and design facilities in the United States. This is a national security advisor talking about these things. So this is pretty important. We've talked about stocks in this sector before, Valdar and some other LIDAR technology companies. We had a Bank of America publication out about this and how in the future, there's going to be different levels of radar, camera, and LIDAR in your car. And right now, these are the projections that 15% of the cars will have some partial automation, level 2 partial automation in 2 years, whereas only less than 1% of the cars will be able to be self-driving, full automation in 2 years. But I think these numbers are low. I think that the reality is everybody's pushing to be on this curve somewhere. And as they do, that's really pushing the demand for these chips up. And it's pushing the technology, I think, ahead of the game. So this is kind of an interesting note to talk about LIDAR and how this is important. But the amount of disruptive technology and new technologies coming to the automobile sector is pretty important. And it's actually put a crimp in production right now in some of these major players. So an interesting topic we've talked about, and I just wanted to touch on that again. So there was this article in Barron's today. And without going into too much of the macroeconomic picture, what's happened is a lot of people have taken on debt while they're in COVID times, right? Because they're working, partial working, not able to pay for everything. They have to take care of maybe sick people, maybe elderly people who are in their home. So they're running around doing 2 or more things rather than just working, right? They're taking care of their kids, they're taking care of the elders, and they need to keep up their lifestyle. So what they've done is take on debt. And to appease this, instead of paying high credit card bills, a lot of new companies called buy now, pay later have come out, which is basically payment schemes. So it's a credit scheme, right? But the thing is, these companies have teamed up with suppliers of goods and saying, even Walmart and some of these big retailers, and saying, look, if we can offer them non-interest payments, right? We'll take that debt on. We'll take the risk on, and just get them to sign up for our services and basically pay for their product as not necessarily on credit, but as a payment scheme. On a payment scheme. So you buy it now, you pay it over four periods, or you buy it now, you pay it over 12 months. And PayPal is one of the leaders in this, but there's a stock called Affirm, and there's some other companies, and basically these have been decimated. Their prices have been decimated since March or mid-February. And this Barron's article talks a lot about the future of shopping. This isn't just a COVID thing. This is going to be, if somebody's going to give you credit at 0 interest rates, this is going to replace consumer debt on credit cards. And what we've seen is this is quite a new, interesting, disruptive technology. Now, what this does to the credit card business and to typical consumer loans is you can't get these buy now, pay later schemes if you have a bad credit score. So what we're seeing is, and my idea is you're going to see an increase in the paying off of debt. Like the average person in the United States, in terms of bad credit card debt that's affecting their credit score, is about $1,300. It's not a lot of money. You got a $1,400 check per person in the United States.
I was going to say, it's your check from the.
It's kind of like saying, here, go pay it off, clean your credit card. We're going to start from scratch. So it's kind of an interesting situation. So what we've got an interesting opportunity for investors is this private debt and consumer loans, right? You can buy now, you can get a bond basically supplied to a company. They use the money to buy up consumer loans, but they buy them at 5 to 6 cents on the dollar. So this is bad debt that the governments have, that the banks have written off. They're trying to get these people off there, but they can't stay leveraged with bad debt. So they have to keep their bad debt levels below 3%. So they sell off this stuff. These companies buy it up. They buy it up at 5 to 6 cents on the dollar, and then they put out their collection agents to collect that money. They're earning, they're earning 50% to 100% a year on this stuff. They're buying $20 million worth of loans for $1 million, and all they got to do is collect $2 million of debt on that, and they make their 100%. So this is kind of the approach. This company's been in business for 20 years, I think, and they sold off. They did one sell off of their business to an Australian company, and I highlight that here. It's called Credit Corporation of Australia. These bonds pay 8% per year on an 18-month note, and they have a 5-year note that pays 12.5%. We've always been interested in private debt. Private debt's kind of the way to get high income in this no yield economy that we're in, right, with no interest rates. So that was something I was watching this week, and then I just have 3 or 4 stocks I want to bring up. I think it's a good idea every week to talk about stocks that we're looking at that are potential for breakouts in the next week, and one of these is this World Wrestling Entertainment. The wrestling is coming back. We can have it inside a stadium, people wearing masks, 50% capacity. They're having WrestleMania in Florida. It's crazy stuff. WrestleMania in Florida, in Tampa, after spring break. You can see this chart looks like it's ready to break out. So this is a stock we're watching next week. We got a biotech company that did break out today. An analyst came out this morning raising his price target from 165 up to 200 on this stock. It's a Zimmer Biomet Holdings. And then we have, I don't know if you guys have heard of this, but this is a gaming company. We have a note here out about Roblox, it's called. And it's basically, one of these Minecraft type of gaming Fortnite things. They have 36 million visitors come to their website per day. They're growing hundreds of % per year, where their over 13-year-old demographic has seen strong growth year to date of daily average users up to 93%. So this is kind of the new thing. If you ask teenagers what they're doing while they're playing at home and sitting at home, this is the new thing. And the stock just went and did an IPO, and the stock is kind of like basing here and setting up for a good run. So I think
is it like Lego?
It's an online game.
Minecraft.
Yeah, Minecraft. So this is maybe you're too young for this, Alan, but you'll get there. This is all they talk about, man.
Minecraft.
And this is the big play in coming into China. They think that there's a big push they'll put into China, and they've teamed up with Netflix, Worldwide Wrestling, Marvel, Warner Brothers to make the characters like you can play a superhero that's in a Marvel comic, or that's a wrestler or something like this. So you got Tencent involved in this with $50 million capital exchange for 49% interest in the Chinese version of this. So there's a lot of play here. It's a company we've been watching, and we don't have a real trade idea on it yet, but I'm just saying this chart looks really good, and the fundamentals are probably there for a high growth story if the market does continue. So that's what I have. It's good to be back in the box here after the break last week from Good Friday. And we'll talk next week then. So thanks, guys.